Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Happy Friday. It's the last trading day of the week as we finally round off our trading activities. My own name is Sheriff Daramola, and for the next 30 to 40 minutes, I'm going to be your host as we will be deliberating on the current market dynamics via our charts, using our technical skills to manage existing positions while we also use the information we gathered on the chart to potentially strategically position ourselves for the next move. And today being the last trading day of the week, it also comes with its own peculiarity, as it's very important to recognize the significance of today, Friday, as a pivotal moment in the market. This day holds particular weight as market participants begin to wind down their trading activities in anticipation of the weekend. And on days like this, we usually see traders, hedge fund holders, and market participants in general often square off their positions, which can lead to increased volatility as liquidity starts to dwindle towards the end of the trading day. Additionally, there is a tendency for market participants to take a more cautious approach, especially if they don't want to hold positions over the weekend when unexpected events can actually happen. So understanding these dynamics will help us to gauge potential price movement and adjust our strategies accordingly. And as usual, today we are going to be paying special attention to our key technical levels and pattern, considering the potential impact of Friday's trading activity. And in preparation for today, I've been able to identify simple trading setups that we are going to be using to guide our trading decisions for today, so you do not want to miss out on this, as we have so I encourage us all to stay tuned in so that you don't miss out on this one. For those of you who are joining us for the first time, you're highly welcome on board, and I'm very excited to have you around with us. And I can tell you may be wondering what this is all about. What is it that we're doing here on the Forex Morning Mastery? Well, as technical traders, we usually gather here on a daily basis in anticipation of both the London and New York sessions. So we do follow-ups and reviews of our current trading positions. The session officially kickstarts about 8:05 a.m. UTC, 9:05 a.m. West African time, and my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. And trust me, the more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I do extend a warm welcome to you and encourage you to actively engage in the comment section. So with that being said, here we shall be diving right into the business. And as usual, the first thing we normally do is to keep tabs with the fundamental, the economic events that will be influencing the market sentiment today. In fact, these fundamental factors, based on our experience so far, often manifest on the charts in technical patterns and price movement. Now, by monitoring the economic calendar, we tend to identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the asset we have been monitoring since the beginning of the week, we've had a a hell of economic event for this week, which of course has influenced the sentiment in the market. And thank goodness we were able to take advantage of some of this turnout. So far this week we've had events from the United Kingdom, which gave us an insight into the labor sector of that economy via the ILO unemployment rate, claimant count rate, employment change, claimant count change, and of course the average earnings right there on Tuesday. And of course, from what we were able to get, it was not a good figure, hereby giving us an idea into how contracting the labor sector of the United Kingdom is. Then that same day we also saw one of the major highlights for this week, which is the consumer price index, another inflationary data from the United States economic docket. And surprisingly, the data came in beyond expectation, further emphasizing how sticky the inflationary pressure in the United States economy is. And this of course has incited the possibilities of Federal Reserve keeping interest rate higher for an extended period of time, and this of course led to some positive traction in favor of the US dollar on Tuesday. Then fast forward to yesterday, we saw how well the manufacturing sector in the United Kingdom is. On Wednesday, then we also saw the gross domestic product for the last month, which came in at 0.2% expansion. Remember, the last 2 quarters in the United Kingdoms, we saw 2 consecutive contraction, which technically puts the United Kingdom in recession. However, the GDP that came in on Wednesday was a let me call it an healing situation, as we're beginning to see signs that the United Kingdom may gradually be recovering, but this has not really affected the pound sterling positively so far this week. So we are going to be looking at how well the pound sterling has been doing and how we will be positioning ourselves for the next move today. So I encourage us all to stay tuned in so we don't miss out on that one. Then yesterday we had another major highlight in the form of the producer price index, which gave us an insight into the inflationary pressure in the United States. And of course, this went further to emphasize the CPI data on Tuesday, giving us a 2% expansion, which was a little bit higher than the expected data. So this further buttresses how sticky the inflation in the United States is. And despite all of this, I'm still very surprised that market participants are still leaning towards interest rate cuts in the June policy meeting. I'm not sure why that is. There will be some hidden agenda maybe somewhere, but we will be looking at the chart to see how the market is reacting to this event. Then we also saw the retail sales data, which gives us an insight into the consumer spending of the United States economy, though this wasn't a very impressive figure at all, as it came in below expectation at 0.6%, though it was higher than the previous month, which was at a deficit of 1.1, but it's a little bit improvement compared to what we had in the previous month. Now, fast forward to today, Friday, March 15th, we have one high impactful event for today. And then due to the fact that it's only one we have, I had to include some mid-tier economic features so that we can have a broader view into what market participants will be looking forward to today. And the first one I will consider important today is so we are looking at from the United Kingdom, we are looking at the consumer inflation expectation, which is coming up in about an hour from now. And this is released by the Bank of England, and it gives us a percentage that consumers expect the price of goods and services to change during the next 12 months. So it's more or less giving us an insight into it's more or less like a inflation projection. So for the previous month, we were looking at 3.3%. So we want to see what the expectations will look like. And in fact, this expectation could also give insight into the economic outlook of the United Kingdom, which could further buttress how the Bank of England will be managing their monetary policy. And remember, in recent time, we've had policymakers from the Bank of England emphasize that interest rate will be kept higher for an extended period of time, which is expected to bring in capital into the pound sterling, though we are yet to see that yet. Then fast forward to about 12:30 GMT. So in about 4 hours from now, we will be looking forward to the New York Empire State Manufacturing Index. So this is another event that will be giving us an insight into the business conditions for New York's manufacturers. And generally speaking, a positive result here may indicate bullish for the US dollar, hereby giving some positive traction in that regard. However, if we look at the previous data for the month of February, it came in at a deficit of 2.4. And based on what is on ground right now, economists are projecting a deficit of 7, which is worse than the previous month's data. So it shows that the economies are expecting a contraction in that sector. So we look forward to see what the actual data is going to be on that one. Then the high impactful event we are looking forward to today is going to be coming up in about 6 hours from now, and that is the publication from the University of Michigan, which is the Consumer Sentiment Index. And for those of us who do not know, this data here gauges the prevailing sentiment and confidence level among consumers, providing us with valuable insight into potential shifts in economic conditions. So changes in consumer sentiment can influence spending patterns, impacting various sectors and markets. Now, from the previous data we have here, you will see that the previous month came in at 76.9, and economists are projecting the same value as the previous month at 76.9. So we're expecting no much change there, but let's see what the actual data is going to be like. So these are the events we will be looking forward to today, and I do encourage us all to mark out the timing, as we want to be on our chart prior to that event to identify structures and patterns that we are going to be using to guide the next move. And of course, as technical traders, we do understand that the anticipation of this impactful event as a way of influencing the behavioral patterns of market participants, which obviously would reflect on the chart as price action. And so what we are going to be doing today, as usual, is to sniff through the current market structure to identify patterns that we will be using to guide our trading decisions for today. So with that being said, here we shall be diving right into the business, and I can see your comments. Wesley Chisenga, good morning to you, glad to have you around with us. Hadeni Babalola, good morning to you too, glad to have you around with us. I thank you very much. I do hope you had a great week as well. All right, so with that being said, let's move right into the first asset on our watch list for this week. And the first one we are going to be looking at this morning is going to be the USOILSPOT. And in fact, so far this week, we've done very, very well on this particular asset, as we've scooped in a very significant amount of profit, having a minimum of 1, 2, 3, 4, 5, 6, 7 positions running in profit as at this point in time. And for those of us who are part of this profitable journey, well done and kudos to you. Now, for those who may have missed out on our earlier session, and for educational purposes, let's run through what really happened at the beginning of the week that led to the decision that made us to buy this asset. So right here at the beginning of the week, it was more of a consolidation phase, as we saw price action confined within the $77.40 level and the $76.80 area to emphasize the prevailing uncertainty in this market at that point in time. And usually whenever we identify a range-bound structure like this on our chart, we do exercise patience, waiting for the market participant to finally make a decision, which will either come in the form of a breakdown of the support line of that range to give us an opportunity to sell, or the breakout of the resistance line of the range to give us an opportunity to buy. So this was what we were looking at the beginning of the week, and moreover we were seeing signs that sellers were not finding it difficult to settle below the support line, hereby increasing the chances of price action finding new high. And as a result of this, we positioned ourselves at both the resistance level and the key level we identified at the beginning of the week, right at the $77.50 area, to capitalize on the uptrend move. And lo and behold, we had our first position triggered, we had the second one triggered, but it took a while before the momentum gathered that strength to push price to the upside. In fact, it took us about 3 days before the market finally gained some momentum. So it was more of a choppy market conditions on Monday, Tuesdays and Wednesday, but we were staying faithful with our analytical approach. And since that Wednesday, we saw our price continue to gain momentum as it broke out structures such as the $78 level, the $78.50 area, all of which we were adding more position as price action were breaking out of the structure. We had the $79.40 level yesterday, and we had the $79.80, and finally yesterday we had the breakout of the $80.30 level, and the breakout of the $80.30 level has seen price action come back into the entry point. So our last position here is still struggling to continue the momentum, but our previous positions are doing very well. And once again, congratulations to everyone who capitalized on this opportunity. Now that price action has moved significantly in our favor, it is high time that we moved all our stop losses to secure this current buy position. And for those of us who still have a buy position running, I'm encouraging you to move all stop losses right now, secure the position. I'm suggesting that anywhere below that last entry and that $79.85 zone seems most appropriate to move all stop losses to. And remember that we do want to be giving enough breathing space for price action to move around. Now, with a well secured position at this juncture, what is going to be our next line of action for today? Are we going to continue buying this asset, or due to the fact that today being the last trading day of the week, we may likely be seeing some profit taking activity ahead of the weekend? So we will be taking those into consideration too as well. But before we go into making a well-informed trading decision, it is important for us to understand why price action has found this ascent so far since the week began. Now, this upward momentum comes as market sentiment have shifted following a larger than expected decrease in US crude oil stocks for last week. Remember, we got report from the API during the course of the week. We also got report from the IEA, which recorded a reduced stockpile, and which simply means that demand is eating into supply. And our simple economics tells us that when there is high demand, prices definitely will rise. And this is one of the reasons why prices have continued to gain momentum. Then the other one is the geopolitical tensions between the Middle East and of course Russia-Ukraine war. A couple of days ago we had of attack of the Russian refinery by the Ukraine military, and this led into shutting down of that refinery, which of course is affecting supply into the global market, and due to this one as well, we have seen price action continue to rise. Then yesterday we saw the IEA, that is the International Energy Agency, projecting the global crude oil demand to rise by 1.3 million barrels per day through the year 2024, upping their initial forecast by an additional 110,000 barrels per day. Now, this is in alignment with what the OPEC Plus were projecting as at the beginning of the week, if you remember. And I did emphasize that I'm not really keen on relying on the report of the OPEC Plus, due to the fact that we know how OPEC Plus are trying to artificially increase the price of oil, and due to this, whatever narrative that comes from the OPEC Plus will be in alignment of ensuring more price to continue to rise. Now that the IEA has supported this outlook, well, I think that we might be seeing a further rise in prices. So the path of least resistance at this point in time is looking very bullish. Now, the question as we head into the final day of this week is, how will this bullish momentum go? What is the path for this bullish momentum? Are we going to see price do some retracement ahead of the weekend, and then we see the momentum start all over again at the beginning of the week? Or will price just continue the momentum all the way from this moment? Now, if we look at the chart from a technical standpoint, remember we had a couple of ascending trend lines at the beginning of the week, which obviously has supported the bullish momentum that we have been enjoying since the beginning of the week. And right here we have a couple of ascending trend lines here, as you will see, after connecting the series of higher lows. And you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we shall continue to look out for patterns and structures that supports the idea of buying. And with the recent situation we have on this chart right now, price still remains floating above this ascending trend line, even though we have seen a little bit of consolidation phase in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 hours. We have seen price consolidate within the $81 area and the $80.30 level, to emphasize the indecision going on in the market at this point. So I'm not carried away by this bearish momentum, as we may be seeing price retrace back into any of this ascending trend line, where the appearance of any form of reversal pattern, it could be a double bottom structure, inverse head and shoulder pattern, or a falling wedge come up at any point in time around the structure. Then we mark out the neckline and obviously buy the breakout retest of the neckline to join the uptrend move. So even though we see a sell move here, we don't need to panic at all. All we just need to do is exercise patience and wait to see how the market is going to be reacting to any of those trend lines. And this may take about 4, 5, 6 hours before it happens, so we need to exercise a lot of patience at this juncture. So just make sure you secure all the current buy positions at this point in time, so that you don't get caught up in any sudden pullback that may happen here. Now, in as much as we're looking out for more buying opportunities here, we cannot ignore the potentials that sellers may likely come in as everyone wind down their trading activities ahead of the weekend. Obviously, you know, market participants may want to close in some of their positions because they never can tell what could happen during the weekend. Anything could happen during the weekend, especially in this era where we have geopolitical tension. Anything can escalate and change the course of price action. So most participants may want to be closing in their position, and if this is going to be happening today, if profit taking is going to be happening today, then we might likely be seeing a slice through of these ascending trend lines. And if we can see a slice through the chances of selling hereby increases. And in that regard, I want to be looking at the breakdown retest of the $79.80 level for opportunities to sell at this point in time. So let's see how the market will play out. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So this is my simple perspective on the USOILSPOT, and that reminds me we have a buy stop order above the $81 area. This is the highest point price action has been for this week, and if price continues to climb new highs there, we will be adding more buy positions to our existing trade. So I do encourage us all to mark out these levels and trend lines on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions or you need some further clarifications as regards to what we just discussed now, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds off to see if there are any questions before we move on to the next asset on our watch list for today. Stay tuned in. All right. So I can see you, Rory Sank Sekilo. Good morning to you. Glad to have you around with us this morning. Happy Friday to you. All right. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. Stay tuned in. So the next asset we are going to be looking at this morning is going to be the GBPUSD, and since the week began, remember the most part of the week has been more of selling this asset. As you will see, yesterday our buy position did not do very well. It moved about how many pips was that? It moved about 23, 24 pips before we got taken out. And remember, I did emphasize that we move all our stop losses on that position to secure that buy position, as we saw the limiting factor surrounding the ascent of the pound sterling yesterday. And so far this week we have been very good on the GBPUSD, and for the sake of educational purposes and for those who had missed out on our earlier session, let's run through what really happened at the beginning of the week and what led to the decisions we made. Now for a top-down analysis on these assets that we are talking about during this Forex Morning Mastery session, you want to be checking the links in the description box below to have a better understanding and background knowledge of how we got to this point. During the Forex Morning Mastery, we only focus on our execution time frame which is the 1 hour time frame we are looking at now. So back into the business. So we saw here at the beginning of the week how price action was confined within the 1.28650 level and the 1.28450 area to emphasize the prevailing uncertainty in the market at that point in time. And usually when we have a range bound like this, we exercise patience, waiting for the market to make a decision, which will either come in the form of a breakout of the resistance line for buying opportunities or the breakdown of the support line for selling opportunities. And as you will see, price spent most of the time below around the support line, as at the time we started our session on Monday we already witnessed a breakdown of the support line. And I can remember mentioning here that for those who had missed out on this opportunity, a retest of structure will be okay for us to continue the downtrend. And in fact, we were able to maximize the potential of that bearish move, adding positions at the breakdown of the 1.28450 level. We added more at the breakdown of the 1.28250. We added more at the breakdown of our key level at the 1.28 area, and then finally at the 1.27760 area, which indeed closed at break even on that one. So as at the first half of the week, we were doing very well on this asset, and during the midweek we begin to see how sellers were finding it difficult to continue the downtrend. As you will see here, after price tested the lowest point, as at that time it was at the 1.276, and we saw the subsequent attempt failed around the 1.27760 area. And due to this failing of a downtrend continuation, we were projecting a reversal setup in the form of a double top double bottom structure, where the neckline interestingly shares a confluence with that our key level at the 1.28 area. And remember, we did say we will be buying the breakout of that structure. Though we bought it at that point, price maintained a consolidation phase around that area for a while before it gained some traction of about 25 pips in our favor. And I did mention that we move all our stop losses on that positions to break even, so that the worst case scenario we'll see there will be a break even situation. And this was exactly what happened. We saw price took us out of that position, and during our live session yesterday I did emphasize that this ascending trend line here, this temporary one, will be guiding our decisions, as a breakdown of both the trend line and the key level at the 1.28 area will be welcoming selling opportunities. And if price goes ahead to break down that descending trend line, we will be adding more sell positions at the breakdown of the 1.2776, which we have a sell stop order below, and we also added another one below the 1.27600 area. So as at this point in time, you should be having a minimum of 3 sell positions running in profit. Let's see how many pips in total. We have about 60 pips on the first sell position. We have about 35 pips on the second sell position, and the third sell position is having about 20 pips. So we have over 100 pips in profit on this one. So far this week we have done pretty well on this particular asset, and once again congratulations to everyone who had capitalized on this opportunity. Now that price had moved significantly well in our favor, we can move all stop losses right now and secure the current sell position. And if you would ask me, anywhere around the 1.27550 area seems most appropriate to move all stop losses to. In fact, you can extend it to the third entry point right there, just to give enough breathing space for price action to move around. Now, with a well secured position at this juncture, what is going to be our next line of action for today? Well, the bearish momentum we enjoyed here yesterday was as a result of the market reaction to the PPI figure from the United States economic docket, which further emphasized the sticky inflationary pressure in the United States. And this development led to an increase in the US Treasury bond yields, which of course we know how the US Treasury bond yield is directly proportional in value to the US dollar. So if the US Treasury bond yield is doing very well, it is expected that the US dollar too would do same as well, and this had led to this positive traction in favor of the US dollar. And generally we are currently experiencing a subdued sentiment in the global equity market, which is further reinforcing the strength of the US dollar, and this in turn is putting a lot of pressure on the pound sterling, making the path of least resistance for this particular asset to be to the downside. Furthermore, and surprisingly, in fact, market participants are pricing a higher likelihood of the Fed initiating interest rate cuts at their June policy meeting. Now, this sentiment may reinforce a decline in US Treasury bond yields, which may also affect the ascent of the US dollar. Now, another factor we cannot ignore here is the hawkish expectations by the Bank of England maintaining higher interest rate for an extended period of time. Now, due to this situation, we may likely see a limiting factor in the descent of this asset. So we need to take all of this into consideration and not ignore the potential that buyers may come in at any point in time. Now, all attention in the market right now, especially for assets involving the US dollar, it's tuning to the next week FOMC meeting, which will be giving us an insight into the monetary policy outlook of the Federal Reserve. So at this point in time, it is very, very important that we exercise caution, and the next move we are going to be taking needs to see some confirmation and follow through before jumping in. So as it is right now, what is going to be our plans for today? Well, we've already identified the lowest point for this week, which is at the 1.27300 area, and considering the path of least resistance being to the downside, it makes a lot of sense for us to put down a sell stop order below that structure to maximize the potential of this bearish move. So we're looking out for more selling opportunities at the breakdown of the 1.2300 area. Now, what is the bullish idea saying on this market? What are the conditions that will make us consider buying this asset? Well, if you would ask me, the 1.27300 area has a memory for buying power. Look at what happened here last week Wednesday, and in fact at the beginning of this year, of this month, at the beginning of this month, we've seen how that level had played a major role in determining the direction of price action. Look at what happened here in the at the beginning of this month. It was more of a selling niche here. We saw the same thing happen here, and then we saw buy pressure resume around that area. Now price is back into the structure, and in the last 12 to 15 hours now, we've noticed some buy pressure resume around that area. So you can see how crucial the current zone where price action is right now. So it is very, very likely that we may see a bullish traction come in from here. Now, if we are going to be considering buying, I would like to see a reversal pattern emerge on this chart before considering buying. And once we identify a reversal pattern, we will be marking out the neckline and then positioning ourselves at the breakout retest of the neckline to join a bullish move. And if you look at this impulsive move right here, we may be seeing a potential reversal pattern, though I'm not saying there is one here anyways, but it may come in the form of a inverse head and shoulder pattern where the breakout of the neckline will be all we need to join the uptrend move. But right now we do not have anything of such, so we shall continue to exercise patience and see how the market is going to be reacting to the 1.273. But based on what we have on the chart right now, everything is looking bearish. We are looking out for selling opportunities below the 1.273, and if any form of bullish expectations evolve here, I will definitely give you updates on both my TradingView and Telegram platform. So at the moment, this is what we have right here, and I encourage you to mark out these levels accordingly, as you will be needing them as a reference point to guide your independent trading decisions for today. If you have any questions whatsoever or need some further clarifications, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds off to see if there are any questions whatsoever before we dive into the final assets on our watch list for today. And if you have found this content helpful and useful in making your independent trading decisions for today, I would really appreciate your support by giving the video a thumbs up. Your likes are very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial. And thank you very much as you do so. For those who had liked already, I really appreciate you guys. Thank you very much. And for those who are yet to like, please do. Let's make the like tally with the number of people on board. Thank you very much, guys, as you do so. All right. So in the absence of no questions, I want to take this as a confirmation that we are all good to go. And in that regard, we shall be moving right into the final assets on our watch list for today. Stay tuned in. So the final asset on our watch list for today is my favorite, of course, and that is the XAUUSD, popularly known as the gold spot. And as at the last hour, we've seen price action trigger our buy position. For those of us who saw my commentary this morning, you must have taken advantage of that opportunity. As we said, we will be looking out for the retest of the $2,166 level to join that uptrend move. Well, let's do a quick recap of what really happened yesterday. Remember, during our live session yesterday, we were looking at the possibilities of both buyers and sellers, and following the PPI data yesterday, we saw two sell positions triggered, giving us a minimum of 100 pips after the 21666 level and the 2160 50 level was broken to the downside, and if you had moved your stop losses accordingly, you must have been taken out with a reasonable amount of profit. And for those of you who capitalize on that opportunity, well done and kudos to you. Now, as it is right now, we begin to see the resumption of buying activity, especially during the Asian session, to further incite a recovery in the price of gold. Now, the hotter than expected US producer price index was one of the major reasons why we saw price drop to the downside, and this also incited a rise in the US Treasury bond yields and strengthened the US dollar at the same time. However, the market appeared to have turned risk averse in the last 7 hours, keeping the US dollar subdued as market participants await next week's Federal Reserve's policy announcement. Now, despite recent developments, the market is still anticipating Fed rate cuts in June, which may be one of the reasons that we are seeing this buying activity happen in gold at this point. And if we look at things from a technical standpoint, you will see that the lowest point price action has been for this week is around the $2,150 level, and the second attempt by sellers to continue the downtrend was negated around the $2,156 area, giving us a new higher low. And whenever we notice a higher low on our chart, it's a clear sign that buyers are gradually gaining momentum. And if this is going to persist, we may likely see price continue to climb new highs. And in fact, during my commentary this morning, after citing this engulfing bullish candle breaking out of the $2,166 level, I told us all that we will be looking at a retest of structure to continue the uptrend. And as you will see, the last hour price action tested and triggered the buy limit order here, and at this point in time we have a minimum of 30 pips running in profit. Now, one thing you will notice here is that that area around the 2,170 has been a barrier for buyers in the last 1, 2, 3, 4, 5 hours. So it's a red flag for us. So we want to be marking out this level. It's going to be serving as another important structure to guide our decisions going forward. So I will label this area the $2,170 level. So if price can go ahead and break out of this structure, we will be adding more buy positions to our existing trade. But since we're noticing selling pressure around this area, please, the current buy position must be secured and protected. So we shall be moving our stop losses right back into the entry point while we wait and see how the market will react to that 2,170 area. So like I said, we are looking out for more buying opportunities at the breakout of the 2,170, and if price action goes ahead to break out of this descending trend line that we identified this week. Remember, we had a descending trend line in place. Price breaking out of this descending trend line will further emphasize the strength of the buyers in this market. So these are the levels we are going to be using to maximize the potential of this bullish move. So we have the 2,182 level, and of course the $2,189.50 level, which happens to be the highest level for this week. So this is what we will be looking at to guide our bullish buyers on this market today. Now, in the case of sellers coming in, considering the fact that price still remains below our descending trend line, you know how we use our descending trend lines, of course. So if this is going to be the case, how do we join a bearish move to the downside? Well, if you look at the last time, in the last 24 hours, I think the last 12-18 hours, price had consistently found higher lows. So let me zoom in and show you what I'm talking about here. So if we bring out our line chart and connect the series of higher lows here, we have a new ascending trend line to guide our trading decisions for today. And depending on how the market reacts to this trend line will determine how we are going to be trading. And of course, you know how we use our ascending trend lines. As long as price remains above them, we shall maintain a bullish bias. But if price breaks down this ascending trend line, then we might be in for selling opportunities. Now we have the $2,166 area, which is the support line of this recent range. So look at the range we have right now. So in the last 5 hours, you can see price action has been confined within a $4 range, that is between the 2,166 and the 2,170. So if price action breaks down this 2,166, it will have also broken down that ascending trend line, hereby welcoming more buy selling opportunities. So the breakdown retest will be all we need to join the downtrend continuation, and we have multiple levels like the $2,160.50 level to add more sell position. And if price action continues to find new lows, the breakdown of the 2,150 will be welcoming more sell position for us. And in fact, if we have new structures to maximize the bearish move, I will obviously give you updates on both my TradingView and Telegram platform. So today's trading activity, our center of focus is between this range, where depending on the direction of the breakout will give us an idea of where price is likely closing for today's trading activity. So let's see how the market will play out. Surely I will be giving you updates as we continue to monitor price action. And for those of you who do not know, we usually have the XAUUSD live window session 5 to 10 minutes into the New York session, where we all come together to monitor real-time price action on the XAUUSD. So you want to be part of that session so that you can see how we actually manage our positions in real time on this particular asset. I forgot to drop the link in the comment section, but as soon as the session ends, you will see a prompt that will direct you to that platform. So you want to click on it, click on the notify me button so you can get notified as soon as we come on live. So I look forward to seeing you all in the comment section of the XAUUSD live window in about 3 hours from now. So I think we have come to the end of the session, but I would like to see if there are any questions or you need some clarifications as regards to what we just discussed. If you do, you can drop the comments in the drop your inquiries in the comment section. So I will take the next 5-10 seconds off to see if there are any questions, and please do not forget to give the video a thumbs up. Let's make the number of the likes tally with the number of viewers we have on board, and thank you very, very much as you do so. All right. So in the absence of no questions, we have come to the end of today's Forex Morning Mastery session, and it has been a great week for all of us in this community as we did monitor the USOILSPOT, the GBPUSD, and of course the XAUUSD, which in total have done pretty well for us all this week. And for those of us who capitalize on these opportunities, well done and kudos to you. So today we were able to take on all these three assets. We were able to identify simple trading setups that we will be using to guide our independent trading decisions for today, and I do hope you marked out these levels accordingly on your chart. If you had done so, well done to you. So all we need to do now is exercise patience and allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you do want to be having a well-defined risk management strategy in place to mitigate against any risk on your portfolio. And for those of you who joined us for the first time, I do hope you are able to gain one or two things from what we discussed here today. If you did, you want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to understand our analytical approach. And I look forward to seeing you same time on Monday morning, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to begin the week on a positive note. And mind you, if you are yet to subscribe to this channel, please do. If you want to see my follow-up content for next week, I will be sharing a couple of videos during the course of the weekend, which will be detailing how we will be preparing for next week. So if you don't want to miss out on that one, click on the subscribe button, click on the notification bell so you don't miss out on the contents I will be sharing this weekend. So it's on this note, I want to wish us all the best of luck today. I do have a wonderful weekend. Trade smart, trade consciously, and do have a wonderful evening. Bye.